Okay, I hope that you can hear me clearly. Let's see that what we are going to look into today is on the chapter 1, accounting information for decision making. So remember that for the first week, we have 3 chapters to cover. So I will do chapter 1 first. Okay, in chapter 1. So the accounting process, all right? So we'll see that the accounting links decision makers, all right? So we have decision makers, all right, using with economic activities, yeah, and with the results of their decisions. So we have this is the cycle of what we call economic activities, all right, where we have the accounting process. So it started with the economic activities, yeah, economic activities. From the economic activities, of course you have to go through accounting process, and using that accounting process you have accounting information. Using that information you make decision making, all right? So that decision making will help you to continue with your activities, yeah, so it's a cycle. So the types of accounting information, we have 3 types actually. All right, we have the financial accounting, we have the tax accounting, and we also have the management accounting. So in this course, accounting for decision making, we're going to focus on the financial accounting and the management accounting. For the tax accounting, you will have to come to another class. All right, maybe you can come to my class, an undergraduate, but I will cover the tax portion. But in this class, we only cover the financial and the management accounting information. Right. So we talk about accounting systems. So systems here, all right, it refers to um yeah, it doesn't work on its own. You must have when talk about a system, it encompasses of several sectors. For example, in this case we are talking about the personnel. All right, you need accountants, you need the managers, you need there are a lot of people involved. Remember, we talk about business activities, all right, and then we have the procedures, how to do a process, for example, right, from one step to another. So that's what we call procedures. We need technology, of course, for example, for recording purpose, all right, and records used by organization to develop accounting information. And because why this accounting information is very important, that will be communicated for decision making. Again, all right, we need a system to record, come up with accounting information that will be used for your decision making. Information system here, again, we are going to look at the system here. We have the users, right? So for example, information system, in this case, talking about the users of the information, it could be investors, all right? It could be creditors. Investors are the person who invests in an organization. All right, they put money into the organization so that the organization can run. Because without investment, all right, there will be no the fund is not there, so you cannot run a business. All right, and then we also have creditors. Creditors are the persons who give credit, right? Or in this case, we give it as a financial assistance, or we call it as a loan to a company or an organization. Managers are the one who manage the company. Owners normally refers to the investors here. So those who invest in a company is also normally owns the company. All right, we have the shareholders or the owners of the company. All right, the shareholders are the one who invest, and they are normally the owners of the company. And we have customers, of course, these are the person who, for example, you're talking about sales, all right, in the business of selling of goods. So customers are those who purchase your goods. If you are in the business of providing services, then the people who consume your services are your customers. We have your employees and of course regulators. If you look at these regulators here, all right, the textbook here is using the US textbook, right? So if in Malaysia, for example, the regulators, we have SEC here, we call it as a Security Commission, all right? IRS Inland Revenue Services. In this case, we call it as Inland Revenue Board, or we call it as LHDN. Alright, it's a Malay word, Lembaga Hasil Dalam Negeri, or Inland Revenue Board in Malaysia. FTC, I think that this one is a financial, I'm not sure what is FTC is. Alright, but in Malaysia, the regulators, for example, we have the Security Commission, SC, that regulate those companies listed in the main or second board. We also have the Malaysian Institute of Accountants. These are the regulators as well. And we also have Malaysian Accounting Standard Board, right? MASB. So we have many other regulators in Malaysia that actually regulate the accounting in Malaysia. All right. So in other words, accounting is highly regulated. Yeah. And then in terms of the financial information, which is provided by the accounting, we're looking at it provides information about the profitability of a company. It talk about the financial position of a company, as well as how the cash flows of a company. So this one is the financial information. Remember, talk about the financial statements. All right, the financial statements actually give you about the profitability, about the financial position, as well as the cash flow of the company. And in terms of the decision support, why we need this accounting information system? Because it provides support for you to, for example, to evaluate the performance of the company, either performance of the company in terms of the financial, as well as the performance of the employees, for example. Yeah, it's also give information, for example, for you to decide whether you want to invest in a company or otherwise. All right, investment. So how you want to decide whether you want to invest in a company or not? Then you look at the financial position. Is the company profitable? Is the position of the company is good? How is the cash flow of the company? So all these things helps you to decide whether you want to invest or you do not want to invest in a company. All right, so it means that this decision is used by the investor. And performance evaluation, for example, for the managers. All right, and then tax strategy, of course. All right, whether you want to invest, what kind of tax incentive available. All right, what kind of um, business transaction that you should go into that may have some tax implications. Yeah. And labor relations. All right, talk about resource allocation. Should you buy more stocks, or should you hire more employees? All right, so all these things related back to the decision making that you make, all right, based on financial information. All right, and then lending decision, of course. All right, for your not for this, for your creditors. Yeah, lending decision whether to give loan or not. If you're a creditor, whether you want to give loan or not to your what do you call that, to a company. All right, for example, you're talking about bank. All right, bank to give loan to the companies, they have to look into the financial position, whether the company has enough cash to make the monthly installment, all right, for repayment purpose, or whether the company is profitable or not. All right, because all these things will give a decision. All right, will make them use the information to decide whether to give loan or not to a company. All right, and similarly for the borrowing. Yeah, right. And then the three information needs here, it talks about, for example, the Inland Revenue Service or the Inland Revenue Board. We need all this information, all right, essential to business, but sometimes management still has many choices as to the types and amount of accounting information to be developed. So again, we do have the standard kind of information that is provided, but other time, all right, a special information is required. For example, if a company were to purchase another company, so we are going to talk about buying, right? You want to buy out another company, of course, you want to look at the position of the company. So this kind of information is a very specific, and normally what we do is that we're going to do a due diligence. right, a due diligence investigation on the other company, whether it is worth it for a company to buy, all right, to acquire the other company. So this is the kind of special kind of information that is required, other than that what we have mentioned earlier. All right. Okay. Now let's look into the basic function of an accounting system. All right. Number one is very important. Number one is that an accounting system. Remember, system here not only we're talking about, not only a person. We talk about the personnel, the procedures, the recording, the technology that you use. Why is it for? Is to interpret and record business transaction. All right. So whenever you have a business activity, all right, remember the first one, business economy activity, that you have to interpret what is actually happening. Is it a sales transaction, or is it a purchase, or is it an acquisition of an asset? All right. Is there a lending, uh, uh, giving of a credit? All right, so all these things need interpretation. So once you have interpreted the business economy activity, all right, then you have to do a recording. You have to record the business transaction. So here is first is to interpret and then to record the business transaction. So once you have recorded the business transaction, then you're going to classify similar transaction into useful reports. All right. So you're going to classify the business transaction, all right, into a useful reports. And this report is summarized and communicated to decision makers. So when we talk about reports here, maybe you are referring to the financial, sorry, you are referring to the financial statements. Okay, the financial statement. Why is it that mine is fountain pen? Okay, financial statements. Right, you're going to summarize that into financial statement and then communicate information to decision maker. So how you communicate? In the form of reports, and then you're going to provide that information to the decision makers. All right. And then another part of the accounting is what we call internal control. So why do we need internal control? Because in accounting, a system, remember just now we talked about the system. What are the accounting system? Encompass of personnel, procedure, technology, all these things require some kind of what we call as a check and balance. So that's why we need a control, an internal control to ensure that the system is in place. So what kind of control that we have? For example, control the environment. So what is required for you to enable the company to control its environment? And then we also have the risk assessment, right? You have to identify what are the risks of a company. In this case, coming back is a financial risk, yeah, and how you control the activities, and how you have the information and communication, as well as the monitoring system. So all this internal control ensure that the system is in place. All right. Okay, coming back to the users. All right, so we have many kind of users here. Just now we talk about information system here. The users here, again, we see that the users here are the owners, the creditors, the potential investor. So who are these users that are going to use the accounting information? Yeah, you're going to use the accounting information for decision making. It always goes back, decision making, right? Either as an owner, as a creditor, as a potential investor, all right, the government agency, supplier, all right, customers, all these things will use the accounting information in your decision making, right? So now, with regard to the financial reporting, we have two types, yeah, the external financial reporting, and we also have the internal. So we'll see where is the internal. It's not. Okay, maybe later. Professional. Okay. So the external, we're talking about the external. Where is it? External financial reporting. All right. It provides. So when we talk about external financial reporting, means that the information is provided to the external users. Okay, we are talking about users here. So the users here, remember, it goes back to here lah. So from the users here, normally the external is your potential investor, your creditors, labor union. So all these are external. Yeah. So all these are external except the owner. Owner is the only insider. But if you have manager, for example, manager is also internal. But other than that, these are all external users. Right. So what happened is that why you need the external financial reporting, you have to provide this financial reporting information to your users. The external users, number one, is to provide specific information about the economic resources, claims to resources, and changes in the resources and claims. Number one again is the economic resources. We talk about resources that claims to the resources, right? Claims to the resources and the changes in the resources and your claims. Number two is that to provide information useful in assessing the amount, timing, and uncertainty of your future cash flow. And the third one, to provide information about making investment and credit decision. All right. At the end of the day, it's all about decision making, whether to invest or to give credit to an organization. Right. So the so the objective of the external financial reporting is actually represented, right? For example, here to provide specific information about economic resources, claim to resources, and change in resources. This is actually covered in your balance sheet. So normally we call it as a balance sheet, or sometimes we call it as statement of financial position, right? So the name says that it's a financial position. What the position of the company? We talk about the resources. All right. What is your resources and the claims to the resources? All right. And then we also have what we call income statement, or we call it also as a statement of profit and loss. Have you heard of that? Profit and loss. So it means that the income statement or statement of profit and loss give you information about whether the company is making a profit or loss in a period of time. And of course, the final one is the statement of cash flow. It talks about your cash, what is your cash inflows, and how is your cash outflow. So these three statements are the primary financial statements. Of course, you have another one we call a statement of changes in your equity. All right. Equity is actually looking back to your investment. All right. The owners, how much the profit, how much in dividend paid to the owners, and many more. So this is the fourth statement, financial statement of changes in your equity. Okay, but currently we are going to focus on these three: balance sheet, or what you call statement of financial position, income statement or statement of profit and loss, and statement of cash flow that talk about the cash flow inflow and cash outflow. So these are the three financial statements, all right? The primary financial statements. So what are the characteristics of externally reported information? All right, for example, here is usefulness enhanced via explanation. All right, so means that not only you see numbers in the financial statements, but sometimes, all right, there are some explanation that would be useful, all right, to the decision makers. All right, a means to an end. So it means that when you come up with a financial statement, so not, that is not the end of it. All right, you're going to use this financial statement to make decision making, and that decision making is the end. So you use it as a means to an end. All right, so you use the information to make decision making. All right, and sometimes, all right, that financial statement not only talk about the financial, but there are many other information can be derived from the financial statements. All right. And historical in nature, of course, remember we talk about recording or the financial activities or the business activities. Historical means that we are going to record based on what, when it happened. All right. We are going to report the financial statement based on the historical. It means that when it was acquired, how much the value of the property, for example. All right. And of course, result from inexact and approximate measures. All right. Some of these accounting record is not accurate, but we try to make it as accurate as possible. For example, if you have an asset, all right, later you'll see that there is kind of what we call depreciation. Have you heard of that? Depreciate. Over times, your asset depreciate in value. All right. So for that, we have to provide depreciation so that when you acquire an asset over certain number of years, the value now has reduced because of depreciation. But how do you actually allocate the depreciation? Again, based on an estimate or approximate measures. It's not accurate, but it is the most accurate. All right, not very, but approximately that will be the value of the asset as at this date after taking into consideration some of the depreciation. Right. And again, whenever we do the recording, all right, it's based on general purpose assumption. All right. So there are some assumptions that we have to consider when we do recording of our business transaction. All right. Okay. Now we mentioned about users of internal. All right. Internal. So who are our internal users? Board of directors, or what we call this one as your BOD, Board of Directors, will need that accounting information for them to, for example, for decision making in terms of the profitable of the company. All right, what can be done, what need to be done. For example, we have the CEO, we have the Chief Financial Officer, the Vice President, unit managers, plant managers, store managers. All these are internal. So they need information for them to make decision. And when talk about internal here, normally we are going to refer that to the management accounting. The external, all right, here external is what we call for the financial accounting. So we're going to cover the financial accounting first, then only we followed by the management accounting. All right. So these are the typical simple organization chart of an organization. All right. Normally they have the owners. All right. And then we have the board of directors. And then we have the CEO, Chief Executive Officer. So it means that this CEO is the one who execute whatever decision made by the board of directors. Under the CEO, they normally have this one. We're talking about big companies. All right, we have the vice president, for example, for ethics. We have the business unit managers. We have the human resource, information, IT. All right, and then we also have the chief financial officer. All right. So under business unit manager, we have the plant manager. So this one later we'll see that this one is the internal. Again, all these are internal because we're talking about a company. But under unit manager, we have the plant manager, many plant managers. All right. And then we also have accountants for each of the plant manager. So these will be reporting directly to the CFO, either under controller or the treasurer. All right. But again, this one is not all company will have the same structure, but generally, all right, this is how it is actually being structured. And then we have the objective. So remember that we talk about the management accounting part. All right, the objective again is to help achieve goals and mission of what? Of the organization. All right, and then to evaluate and reward decision makers. Right, so that is on management accounting. But when we go back again, we look at the objective of the external financial accounting. So this one is the FA, right? For the FA, hold on, let me try FA, all right? So for the FA, the objective is not the same. All right, we are going to provide information about the balance sheet, income statement, and cash flow to be used by the external users. For the internal management accounting, all right, the users is actually the internal, all right, to help achieve the goals and mission of the company and to evaluate and reward decision makers. So, and then we talk about the characteristic of management accounting. All right, it means to an end, similar. All right, but is that in this case, the end here, decision makers are the internal users. Timeliness, because we need to make decision very quickly, because this information will also affect our external. All right, not external. I mean that how we decide how the operation of the company will affect our financial statement that will be used by the external users. All right, identify decision maker and oriented toward future and measures efficiency and effectiveness. So this one is very important, to measure efficiency and effectiveness of the operation of the company. All right. So again, these are the incident features, right? We also have the generally accepted accounting principle. We have the Financial Accounting Standard Board. For example, in Malaysia, we also have Malaysian Accounting Standards Board, MASB. We have International Accounting Standards, all right? Security and Exchange Commission. We have the Public Company Accounting Oversight Board and audits of financial statements. And there are many legislation that they have to follow, right? Because accounting again is highly regulated, right? So these are the professional organization, but again, this one is in the United States. In Malaysia, we have again the Malaysian Institute of Public Accountant, or Malaysian Institute, Malaysian MICPA. We have the MICPA, Malaysian Institute of Chartered Public Accountant. We have Institute of Management Accountant, we have Institute of Internal Auditors, we have in Malaysian Institute of Accountants, and many more, right? So all these we are looking at Malaysian, all right, but also similarly in your countries, you will have your own accounting organization, and they are professional organization, right? And so we also have, for example, CPA, certified public accountants. We have certified management accountant. We have certified internal auditor. So we're talking about certified here. What is the difference, right? A person, for example, doing a degree in accounting, they have degree only. But for you to be certified, you have to take another examination by the professional accountants certification. All right. For example, we have, for example, most commonly known is the ACCA. We have the ICAEW. We have the MICPA as well. All right. We have the CPA Australia and New Zealand. So all these are the certified public accountant. You have to pass this professional examination. Then you have to work for a minimum of 3 years in the accounting related sector, then only you become a certified public accountant, right? For example, in my case, I'm a certified accountant for Malaysia Institute of Accountant, as well as a member of a CPA Australia, right? And ethical behavior is the cornerstone of the accounting profession. Without ethics, all right, remember that this professional accounting, right, they are actually dealing with money, yeah. So it's very tempting. So ethics must be the core of the profession. Okay. And then some of the careers in accounting, as mentioned earlier, we have the public accountants, we have management accountants, we also have accountants working everywhere, either in the government or in the private sector. You need accountants, all right? And we also have the accounting educators, all right, that help to develop future accountants. All right. So what about bookkeeping? And remember that you are all masters. You will become the decision makers in the future. All right. When you make decision making, you will need to understand the how accounting is actually work. All right. When you do make a decision, all right, you have to go to understand how the business or economic activities translated into financial statements. All right, because these financial statements, you as a decision maker, will use this information to make a decision. For you to do that, you have to understand the financial statement. All right. Bookkeeping is normally done by a clerk. We call it as a accounting executive, for example. Yeah, do recording of transaction. And remember that now with all the AI, with all the accounting system, all right, you just key in information and then everything is extracted for you. But again, understanding is important so that you understand what is actually happening in the business economic activity. All right, then you can interpret that activity, and then when you go through into the financial statement, you understand what is actually happening. Right. As a professional accountants, all right, our job or our role is more on the interpretation and the use of the accounting information rather than preparation of the financial statement. But why you are here? Because you need to understand the process of coming up with the financial statements. Then only you'll be able to interpret the financial statement accurately for you to make a decision. Okay. So I'm not an accounting major. Why should I learn this? Because accounting is the language of business. You have to understand the accounting, then only you understand the business better. All right. And trying to run a business without understanding accounting information is similar to trying to play sports without understanding the rules. So I believe that you'll be able to understand, appreciate this accounting information, all right, by understanding the rules of the business, all right, so that you'll be able to do better as compared to those without the accounting knowledge, right? And you having a master of management, inshallah, all right. So once you have the accounting, all right, a knowledge, all right, is normally is a stepping stone, all right, is very invaluable for key position in management or administration. You see that even though, for example, a person with an engineering background, for example, or we have architecture background, for you to have a project, normally you will have to come up with a business proposal. All right. So what is a business proposal? You have to lay out, all right, what the project is all about and what is the monetary uh consequence. All right. For example, impact. For example, what is your budget? How much are you going to use? How much can be sold? How much profit can be made from the project? If it's on monetarily, all right, monetary impact is positive, then only, all right, the company or the one who are funding your project would be willing to give the contract to you. All right. Helpful in many aspects of your personal life. For example, you need to do budget for your family. Start small from yourself, your family. All this requires financial knowledge. All right, for personal budgeting, for your retirement decision, and even to avoid investment fraud. Right. So ethics, fraud, and corporate governance. All right. Corporate governance, as mentioned, is a corporate governance. How you govern a corporate activities, right? Entails corporate structures and processes for overseeing the company's affairs to ensure that the company is being managed with the best interest of shareholders in mind. All right. For example, this one quite some time ago, yeah, Dennis, the former CEO of Tyco, was sentenced to 1/3 to 25 years in prison for conviction of conspiracy, securities fraud, and falsifying records. So this is just an example of how fraud, all right, use of information, accounting information for fraud purpose is non-tolerated. Right? I think that's the end of chapter 1. Right? Please review again and get some knowledge about some other readings on your this topic. All right, the introduction of financial and management accounting. Right? So I'll see you again in the next recording. Assalamualaikum warahmatullahi wabarakatuh.